Okay. All right. Okay. So what is Operation Sindoor? I'm sure that everybody is aware right now what's happening. There is a very, very big conflict that is happening around the borders, right? So main thing is what is Operation Sindoor? It is a calculated and restricted missile attack on 9 terror infrastructures. The operation was in response to the terror attack of April 22nd, and it is aimed to eliminate hideouts of terror groups. Understand that this is a war against uh, terrorism. It is not against a particular country. They just happen to be there. That is, of course, there. But it is in POK, right? And it is the purpose of the entire thing is to eliminate the hideouts of terror groups. And then from there on, things have just escalated attack over attack over attack. And that is what has been happening over the last couple of days. You're seeing it everywhere, how things are playing out and what sort of impact it is happening on infrastructure. All right. But purely understand the purpose to eliminate only terror groups. Now we'll just take some stock of firepower and then we'll get into what impact do all of these have on the markets? How have previous attacks, previous conflicts impacted the market? And is there an opportunity for investors to actually take advantage of? Does it make sense or not? Right? Okay, taking stock of firepower today, your per capita military expenditure is far, far higher than that of the neighboring state, I mean the neighboring country, right? So if you see here everywhere, right, we definitely have a very, very large military defense budget than them. Naturally, here today on the firepower side, there is a complete upper hand, right? So in terms of active military personnel as well, we are double than that of the other country. So as an investor, what we see is that okay, let's try to be rational. We have to be in the middle. We cannot do a lot of religious or racial profiling and then take a decision based to invest. No, how does things stand today? Today things stand from that angle that yeah, the firepower here is a lot more better. Firepower is a lot higher, right? So there's support coming in from there as well. But as an investor, what you need to see is okay, today I'm standing in the middle, and if I have to take a particular decision, I have to take all of these things into consideration, right? Because ultimately, this will determine the level of impact that I can have, which is India, right? So, one question for you, right? If you can answer that today, can you afford an escalated war? Right? Rather, who stands to lose more out of this? You can put it in the comment box. As a rational investor, you have to ask this: who stands to lose more out of this? And what will be the economic impact given if things escalate from here further? Any comments? So the question here is that who will have a larger impact in terms of seeing this data for firepower and in terms of foots that are there on the ground, right? If this war escalates from here further, who is going to have an economic impact? Who is going to have a larger economic impact? You can put your comments in the chat box. Okay, we could afford a sustained conflict for a few months at least. Don't know what will happen. We are not in an intention to escalate. Okay. As an investor, flip it, right? You are on this side that there are a lot of conflicts happening on your side. So you are a growing nation, right? You are poised to grow between 6 to 6.5%. Right. So there is a good amount of growth that is coming onto your side. India also got affected economically because investors hesitate to choose India because of the war situation. Related to, right? That is in terms of capital flow safety. All right, got it. So yeah, so who stands to lose more out of this if it escalates and if there are things that go out of hand? Today we are in a growing scenario, right? We cannot afford our growth to take a step back. Right, given how our demographics are, given all conditions possible, right? Today we are on the front foot. We are the only nation that is offering the world 6.5% sort of growth rate. Right. So we cannot afford to lose out on our momentum in terms of growth. Right. So this you have to remember. Right. So when you see information outside, understand that uh, news, social media, Twitter, YouTube, and all of that. These are all opinions. These are all propagandas that are coming to you. So don't pay too less attention to all of that, right? But as an investor, what you need to say is no. If things were to escalate, things can get very very bad for us because here we want growth. We are on the growth part, right? Maybe the opponent is not, but we are definitely on the growth part, right? So we have to think about ourselves, right? So understand that no matter so, despite our muscle in terms of military personnel and in terms of firepower, right? Given where we are in terms of growth, we do the probability and the possibility of us losing more is far higher. All right. Now we'll see what happens to markets during such a conflict. Okay. Okay, this is an article for a couple of days back, right? So you look at this, these are all from brokerage reports, right? The risk of a full-scale war between the two neighbors is not envisaged in our scenarios. Bernstein, which is a very large brokerage firm globally, has said, I don't think it's going to happen. Okay. Historically, markets have dropped to varying degrees during such events, but have rebounded on all occasions. Okay, so they have visible proof to say that, which we'll see going forward. It falls for some time, there is a small short economic impact that's there. Right. Hold on. Can you see it now? I should just have some small fillers, just couple of slides here and there, so that when it gets stuck, we can go back to the main thing again. I will actually try that the next time. Okay, so what Bernstein has said is that the risk of a full-scale war between the two neighbors is not envisaged in our scenarios. Not going to happen. Historically, markets have dropped to varying degrees during such events, but have rebounded on all occasions. This is a couple of days back. The source is Economic Times, so it has already come in the newspaper. Right. So our job is now to validate as investors. Okay, things have gotten bad. How bad have they gotten? And second, if they have rebounded, how good have they got? Right? Is it something that is going to be very very bad? So we look at how things have been bad for us in the past, and then try to gauge if it makes sense for us to take that level of good or not, or see if it's a good enough number to look at. Now, the impact of past conflicts on macroeconomic variables. So you look at all the wars that we have had, right? What you should see is here your Indo-Pakistani war that took place in 65. It went on for a month, 2 weeks and days. Today you have a scenario for Ukraine and Russia that has gone on for nearly 3 years. Okay, so these are all small numbers that you're seeing, right? So you see the impact that it has had on growth in the following year going forward, right? Small impacts have definitely been seen. Longer, larger impact. Shorter, not a lot of impact. Some small level of impact that is taking place, right? On growth. Second, on prices, right? You see on prices, it is volatile. So you do see some bit of hardening in terms of prices, which is more on the inflation part, right? So you do see that growth depends on how long it goes. Growth can falter, right? And it does not look, given where we stand today in terms of growth, that anything large is taking place for us, where our large economic contributing states are getting very badly affected by it, right? So in that sense, the way things stand today, if it escalates, then it's a different scenario. We will look at it only that point. As things stand today, growth looking pretty stable. It does not seem to get very largely impacted. But inflation definitely is a concern if things start to escalate going forward, where we do see that inflation starts to harden up a little, right? Harden up a little. What happens to our deficit numbers? Our deficit numbers also starts going up a little. Today, given how this is back then, those situations were completely different. Like those economic conditions for India were completely different. Today's economic conditions are completely different, right? So, given where we are today, as an investor, what you can go ahead and assume, seeing all of this, is that today we are in a much better state than what we were in those years. So, impact is going to be there, but it might be a small impact that is there, and we do assume that there will be some amount of impact that can come. But given how we are, given how our numbers are placing, are looking out to be, not too much great impact that can take place, right? What has happened to markets then? Now, this is during the Kargil war, right? Where you saw that over a 1 month period, right, in 99, you saw that the markets went down by about 8%, right? All of this is recent data only, right? It went down by 8%. And then after that, you saw a huge rebound happen. So, yes, we can assume that if things escalate going forward, we will have some bit of impact. Right now, we have not had too much impact at all, right? The neighboring country has had a huge impact on their markets. It dropped by 7% or so. We have not had that level of impact at all, barring yesterday when things have started to get slightly bit escalated. But when things were announced, when the attack happened, when the plans were being made, when all the anticipations, people were preparing also. The market was already prepared that no, the lot of it has already gotten factored in saying, okay, we understand that there will be some bit of retaliation from our side, right? Markets did not see too much of volatility, barring yesterday. Right? How has that volatility been in the past? Volatility has been very, very large in the past for a short period of time. This was when flows in India also were not coming. Today, we are in a scenario where flows are very large. Domestic institutional investors have been pumping the market, right? So, can this fall or can this short term issue be a large one? Probability is yes. Probability, right? Going by how things are being placed for us, right? We just have to be prepared for something like this that can happen. We cannot wait on the sideline for things to take place, but we definitely have to prepare. Now, what has been this? So we have to validate how much of this short term impact uh, can affect us as investors, right? So you see over the last strikes that have taken place, Nifty's 1 day change, broader market changes are not very, very large, right? Similar to what we are seeing now. So as things have progressed, right, we are not seeing too much of volatility also on the short term side, right? So we see a 5%, we see 3.5%. That is a 1 week sort of thing. Now we have seen a 1.5% sort of a thing, right? So we can say that, okay, this is where we are going to be, where the volatility will somewhere be between these ranges as things have progressed for us, as our economic conditions have become far better, as our defense budget has grown, as a huge chunk of growth is getting captured by us, right? At the household level, our impact seems to be far lower. Impact is definitely going to be there, but it's going to be far more low. So we validated the fact that impacts are looking to be a little bit on the lower side. It's happening, but it'll be on the lower side compared to what we have seen in the past. Can there be a case where it is going to be much higher? Can be, right? If things do escalate going forward, right? Definitely there can be that sort of a thing. Right now, given how we are looking only at these scenarios. Okay. Now, key events, right? We've seen 1 month, this has been the case. What happens 6 months later? What happens a year later? So a year later, things just are fine after that, right? There's rebound, things go back to normalcy. We've seen that the short term impacts are then very well covered. Growth is then covered for in the next year or so, and barring one major event that took place. But more than that, you don't see that huge of an impact that's there, right? You do see that it comes back to where it was, and there is a sense of normalcy that starts taking place in assuming for growth, right? So then only then you can start paying premiums for the growth that is going forward, right? Short term volatility definitely there. Longer term things tend to normalize going forward. Okay, now what should investors do? I'll take a pause. I'll get your opinion on what should investors do first, and then we can probably open the floor for Q&A. So what should investors do now? Open question, open comments. Okay, there's a comment to say keep liquidity to scale up investment. Next comment, if any. Okay, considering Trump tariff plus latest quarterly results which are poor and Operation Sindoor, can we expect prolonged correction in the market? If so, can we invest more into markets as per our M2W advisor? Okay, we should put lump sum in every dip or step up our SIP. All right, perfect. Right now, first, I will go with that comment to say, yes, you should participate in volatile times, right? And look to step up SIPs in this year. Okay, so that is a very, very large, big, constant strategy that you must follow, right? That you can participate in all volatile times. This is a very volatile time, so you should be willing to participate. Second, where should you be willing to participate? Right? That is the second comment, considering Trump tariffs and latest quarter results which are poor. So on the equity part, there are only some areas where you can actually consider to invest in, right? Which is more on the consumption part, cheaper parts of the market, which is more on the consumption part, which is more on large caps, right? Assuming that things take a little bit time to rebound. Right. So on the equity part as one particular asset class, that asset class it comes at the bottom of the entire priority list. Since we will take into consideration there's only some couple of ideas that we can actually invest in on the equity part. What does the priority become then? Debt then starts becoming a priority right now. Another asset class which is gold and silver starts becoming a priority right now. Now gold has had a very, very good run, right? So silver now is much cheaper than that of gold. Naturally silver does come into a virtue to actually consider to invest in. But main thing comes is on the debt part for you to be able to take advantage of. Debt becomes a little volatile now. That does come a bit of sell off. But when this entire issue starts to go away, given where we are, then that asset class again becomes a big category for you to take advantage of, which is much more safer, is not very volatile in nature, in general, not very volatile, so that you can create that level of optionality to invest in. Right. So keep liquidity to scale up investment becomes invest in another asset class that can give us that level of opportunity to take advantage of in the market while we still tend to make 7.5% return. Right. So that is what investors need to do right now. Take advantage of this entire opportunity. Do not panic. See, situations will constantly evolve. There are only a couple of people that know about what's going to happen, about the direction that we need to take. It's definitely not the news channels and other social media platforms that are going to tell you where we're going to take. Like, be rational. There is an information war that is currently taking place. As investors, you have to be completely rational. You have to be on the middle ground to say, okay, where am I first going to go get my data from? I'm only going to go get my data and information from the government sources. It's not going to be ET, it's not going to be Republic, it's not going to be any of these news channels, it's not going to be YouTube, it's definitely not going to be Twitter. Right? Whatever WhatsApp forwards are coming to you, see it at that and move on. Right? There is information about what we are saying and what they are saying. Complete mismatch. It is different. And as the era for information keeps on increasing, which we are currently in, you will see a lot of misinformation being spread. And Foreign Secretary himself has said that there is a lot of information, misinformation that is being spread outside. And the government has been very, very proactive in having conversations, open conversations, and sharing out what they have done and what they intend to do. Right. So be rational as investors. Only go to government sources where you can actually believe the data and you can believe the information that is coming to you. Right. Focus on long-term fundamentals. Right. In this period where the noise is extremely high, you will see very, very large numbers. You will see a lot of predictions starting to come in, but you only have to focus on the long-term fundamentals. Right. Until the government comes and tells you saying, boss, growth is not going to come in for us this year. Until then, you don't have to think of it. Yes, you can prepare for it that, okay, if growth does not come, what do I need to do? What do I need to do? I'm only going to go towards cheaper parts of equity markets. I'm only going to go to an asset class that is offering me good amount of safety, moderate returns, so that I can get that opportunity to start investing in when another asset class that is offering me higher growth comes in a good valuation range. Right. And then protect myself against any currency movement by having a good amount of gold/silver. Right now, silver, then priority will become gold. Right. Always be ready to participate in volatile periods like now. Right. This is where your don't panic starts kicking in, not by saying that you have to be an aggressive investor. No. Rational investors always continuously reevaluate their situations because everything is going to evolve. You have to go back, reevaluate. Okay, how does this situation change my entire assumption of my long-term fundamental number? It does not change, it does change by a small number. Okay, still I am willing to put my money in. So that level of preparation always has to happen. So always be ready to participate in FOS. This is the behavior that you need to follow as investors rather than doing a lot of profiling, rather than trying to predict something which might not happen. Only one particular room in Delhi knows what is going to happen. Everybody else does not know. Everything else is speculation. All right. Now, whatever questions are, I'm very happy to take it up.